We measure, in fact, I just did a study over the weekend and I shared it with my fellow analysts of the ratio of the relationship between silver price and gold price expressed as a percent. In other words, what percent of gold price is silver price expressed as a percent? And if you plot that, you can see that we've got what I would call a major basing level in the spread, such that it won't take much rise silver relative to gold right now to start it blowing through the roof.
Over the past few weeks, primarily as a result of rising geopolitical tension around the world, gold and silver prices have rallied sharply. Just a few weeks ago, both metals were down to multi-month lows, clobbered by rising U.S. bond yields. But prices started rising swiftly due to rising tensions in the Middle East. So far, both gold and silver have climbed by 10%. Silver went from a low of $20.99 to its current price of $23.11 as of press time. On the other hand, gold rose from $1,821 to $2,006. Though both have had 10% increases in the past 3 weeks, there's understandably more excitement about gold's current price levels than silver's. To begin with, gold is close to its all-time high, a feat it always manages to achieve with every rally. However, silver is perceived to be languishing in the $20 range, well below its previous all-time high of around $50. To say silver investors are getting impatient and frustrated will be the biggest understatement of the year. However, things are about to take a different, much more positive turn, according to Michael Oliver of Momentum Structural Analysis. Oliver recently appeared for an interview on The Jay Martin Show, during which he gave his outlook on gold, silver, and the overall United States economy. According to Oliver, the U.S. stock market is about to have its biggest, most massive bubble burst in recorded history. But this burst will not be limited to the stock market. Oliver believes it will have a horrendous real-world impact on investors. In addition, the everyday guy will also be severely affected. Savings will be quickly depleted, unemployment will skyrocket, and corporate bankruptcies, which are already at record highs, will become even more rampant. As the bubble bursts and economic decline intensifies, Oliver is certain that gold, silver, and related stocks will be very big beneficiaries. Oliver is predicting large increases in gold and silver prices, and he believes much of these things will unfold within the next 12 months. We will now bring you clips from the interview. Please ensure you watch the video to the end so you don't miss any important details. Also, ensure you subscribe to the channel and turn on post notifications for more videos like this. Thank you for your support and enjoy the video.
The chief beneficiary of this is going to be gold and gold related. Gold, silver, and the gold miners. Though the miners definitely lag gold at times to where they feel like, who wants to own them? And silver lags. We measure, in fact, I just did a study over the weekend and I shared it with my fellow analysts of the ratio of the relationship between silver price and gold price expressed as a percent. In other words, what percent of gold price is silver price expressed as a percent? And if you plot that, you can see that we've got what I would call a major basing level in the spread, such that it won't take much rise silver relative to gold right now to start it blowing through the roof, meaning where silver vastly outpaces gold. And what I found that was so interesting is quite often this shift favoring silver comes late in a bull trend. And it comes at the phase in the bull trend where most of the dynamics occur. Like it occurred mostly in mid-79 to early 1980. That was the tail end of that gold bull market that had been underway since the 1976 low to the 1980 high. Most of the price gains in silver and gold occurred literally in the final several quarters of that bull market, which actually, if you look back, began in the 1970s. Gold was about 30-something bucks, went up to about 200, pulled back 50%, and then launched again. So that was like a decade-old bull trend.
Right.
The next bull trend was the 2000 low, around $250 gold, that went to 1920. That took, 10, 11 years. Well, if you look at our bull market, it's already 8 years old. We bottomed in late 2015. Around $1,000 gold, $1,050. Okay, we've doubled. So the gain has not been meteoric. It's been fairly steady if you look at it. Stand back and look at it monthly. It's not as bad looking as a lot of people think. And now we're pressing at the highs again. We think what gold does in the next year and what silver does in the next year, and maybe even less time than that, could be so dramatic especially if we see that silver spread break out versus gold, meaning the relative performance of silver cross certain levels that we've defined. Right now, for example, silver is about is below 1.2% of the price of gold. You divide silver into gold, okay. You get up over 1.3%. It's not asking a lot. And we think the launch begins. And at that point, we think not only will the silver outpace gold again, and quite often it's very dramatic, but it's also fairly quick. It doesn't take years. Once that spread breaks out, it usually gets its job done within several quarters. And with that, you get a price surge that is awesome. So that's what we're watching right now. And I think what's going to happen because of the broken bubble is that the central bank has to go back to do what they were made to do. And that is defend government debt at all costs, print money. And when they conceive with their lag data points that the bubble is really breaking, then they'll have to come back in and do what they did in the COVID situation in March of 2020, inject massive amounts of liquidity. They even bought ETFs back then. So I think the reversal on part of the Fed is probably underway. It's unstated, but it's underway. And I think if you break the stock market a bit more, like another 5% or so, S&P we're talking about, I think at that point, the Fed's going to start fully explaining that there's no more rate rises and maybe even talking about rate cuts. Beneficiary, gold.
During his interview, Oliver also discussed his outlook on the U.S. economy, which he predicts is heading for some significant economic challenges. Oliver believes the problem has already started in the stock market and will slowly ripple through the economy within the next 12 months. According to the renowned financial analyst, things are going to become quickly undone, and the warning signs are already very visible in the stock markets, especially in financial stocks. Oliver further explains how weak stock market indexes like the S&P are despite recent rallies. They only look strong because of a few stocks. Oliver warns that when the gathering storms are completely unleashed, everything will be negatively impacted except for gold and silver. Here are more clips from the interview.
I think that Powell and Yellen, who will never express this because it would express panic, and they don't want to do that, it would also indicate a sense of failure on their part. The big banks, the top 10, don't look good at all. In fact, if you look at Citicorp or Bank of America, Citicorp made a monthly close last month that happened to be its lowest monthly close in 7 years. One of the top 10 banks, no headlines, just the lowest monthly close in 7 years since 2016. They're making lower price levels now, Bank of America and Citicorp, and even some of the other banks, Goldman Sachs, Morgan Stanley, are starting to break in ways that if you even just looked at their price chart, you would say something's wrong here. So rather than look at the S&P or Apple or Microsoft, look at the financial sector. Now, in late 2007, the S&P 500 was punched up into the upper 1500s. We had a target zone we expressed in late 2006. We said that next year we're going to top the market. We think it'll top between 1550 and 1600. Well, in September, October, finally, of 2007, there was a final rally in the S&P that got it up over 1550 and into early October. Now, what happened that month was the Fed actually cut rates. So that last upside spike to a marginal new high by the S&P occurred when the Fed not only ceased their rate rises, which had been underway for several years, but they actually cut rates. The market peaked. You could have sold that rate cut, and you would have almost nailed the high in the S&P. But if the same time the S&P was beating its chest in the 1500s and the upper 1500s, like nothing's wrong, if you looked at the financial sector, it was melting and melting and melting. The two charts were totally divergent. Something was wrong with the financial sector. It knew it. Despite the fact that in mid-2007, Bernanke came out and declared, there's no real estate or mortgage problem. So everybody should be comfortable, right? Okay. The financial sector was melting constantly. And so back then it would have paid good to pay it would have been good to pay attention to the financial sector, not the S&P. We think that's the same case right now. Watch the financial sector. There's also some other sectors that are very interesting that most people aren't looking at because they feel so comfy. And it's our assumption that when you break, for example, the healthcare sector, it comprises 13+% of the S&P 500. It's about to blow out right now at the current price level. If it closed the month here, it would break through its 36-month average, where you say, well, so what? It has held that average for 10 years. Every pullback gets near that average or touches it and explodes. Now you've melted through it. Nobody's noticing. And yet it's one of the happiest sectors up there because its price chart has gone sideways for the last 2 years, not really dropped much. And I think it's about to ambush people. So what we're watching are things that the public's not watching.
Michael Oliver has made a lot of interesting observations and predictions, and he believes at least 90% of everything he predicts will occur before the end of 2024. That includes a significant increase in gold prices and a noticeable decrease in the gold and silver ratio when silver finally takes off as Oliver predicts. What are your thoughts on Oliver's predictions for gold and silver? Please drop your comments and observations in the comments section below. Also, ensure you hit the like button, subscribe to the channel, and turn on post notifications for more videos. Thanks for watching.